What's up, opportunity cost investors? In this video today, I'm going to show you Tommy Bryson's $100,000 stock portfolio update. And if you're new to the channel, we have a series where we rate portfolio updates out of 10, starting at 10, which so happens to be 1 point for every $10,000 he has in his portfolio.
Just to be clear here, before you read the comments, this video right here is clickbait. I only have around $92,000 invested.
And before you think I'm just going to bash someone for having Tesla or Nikola in their portfolio, we actually don't deduct points for what securities they own, but instead how they calculate and communicate their performances to see if we can understand their true performance. And by doing these reviews, we answer the question we all ask ourselves during these portfolio updates, and that is, how much money are they actually making, and could we or should we use their strategy? In our first stock portfolio review, we took Ryan Scribner into the lightning round and reviewed his $100,000 Robinhood stock portfolio update, which set the bar for portfolio updates at a 4, which means now we're going to take Bryson's update and Scribner's update and combat them head to head to see who pulls out ahead. So put your guesses in the comment section below. Who do you think is going to have a higher score? In order to communicate your performance, we need to calculate it. And to calculate it, we need a spreadsheet so we can do some math. And that's because we have a specific set of criteria we need in order to figure out what our return is. And that is the starting and ending dates, the beginning and ending balances, and any contributions or withdrawals that were made within that period. And before you tell me, Jesse, why didn't you just look at the rates of return on the brokerages? Well, those ones actually don't give you your rates of return, not to any fault of their own, so we need a spreadsheet to do the math. So does Tommy leave a spreadsheet for us? Nope. I even checked his description under his YouTube video, and you can see a link to his Patreon where he says you can get his investment portfolio. Under that, I paid for the $7 a month membership to his personal finance Patreon, where you have access to whenever he bought or sold securities. However, after viewing the site for a little bit, I actually couldn't find it, so I ended up messaging him directly. And it's pretty cool, even though I didn't get the spreadsheets I was looking for, that you can message him directly. I mean, here's a guy with 250,000 subs that's giving me the time of day, when even my own cat won't give me the time of day. Give me a look at... Oh, let's try this again. Give me a look. Oh, there it goes again. But we messaged back and forth, and he was adamant that all the information was in his past videos. So I binge watched every single one of his videos. And while I give him credit for providing usually the beginning and ending start dates, the beginning and ending balances, the contributions were never clear. Whenever he would talk about contributions, he would use the terms about or average, which is not what we need. We need the strict numbers. Math is math. They can't change math. So instead, we have to deduct 2 points. First, for not having the spreadsheet, and second, because the accessibility isn't there. If I'm doing a portfolio update and I want to make it the best portfolio update there is, I want all the information to be available on one video. To ask your audience to go across all your videos and filter out which ones apply and which ones don't, especially when you're a straight hustler like Tommy Bryson, who's got hundreds of videos on his channel. I mean, I don't want to ask my audience to do that. So that's a way we can improve. By the way, watching every single one of his videos and doing this analysis took a tremendous amount of work. So all I ask for in return is to simply like that smash button. And while we're on the topic, people have been asking me why I say like that smash button. And that was just my way of differentiating and thinking outside the box. Also, it makes Hulk happy. You don't want to know what happens if I say smash the like button. But let's address the elephant in the room. In a previous clip, we talked about how Tommy said his portfolio was in the $90,000 range and not the $100,000 one. And it has me struggling with whether I have also clickbaited by putting $100,000 in my title, or do two clickbaits cancel each other out? But anyway, we actually don't care how much it is unless there's a scalability issue, which there isn't in this case. We're more concerned with the percentages. So we're not going to count this against them.
Let's get into my portfolio and show you exactly how much money I have, how much money I make, and how I got started with everything. Now, the first thing is this, guys. I invest into a total of 5 different apps, and I'll tell you why.
One thing that stood out to me is he's one of the rare few who put his asset allocation here and described why he invested in each segment. And this is really cool. However, and as much as I want to give him a point for this, we know from a previous video his net worth is more than double his investment portfolio, which means we're still missing some asset allocation and we have to deduct another point. One thing to keep in mind as we do this is one portfolio update is hard enough. Imagine trying to beat Tommy Bryson and tackle 5 at one time. And I've noticed that if one person's going to do something wrong in one portfolio update, they're most likely going to do it wrong on all 5. And instead of penalizing them 5 times for each of the updates, we're just going to look at it as a broad sense and deduct 1 point for one thing done wrong. Otherwise, we'll be in the negatives. We don't want to do that. His first portfolio should come to no surprise to people who follow his channel, and that's Acorns. Through watching his videos, you can get his beginning start date, his ending date, his beginning balance, his ending balance, and his withdrawals. However, you don't get his contributions. This is what we know. He started with $7.60, although it takes a while to get there. And he put in $500 a month at a specific date every single month. However, on a undisclosed day, he switched from $500 to 10% of his income without telling us what 10% of the income was. Also, we can only imagine his income grew over time as he became more popular on YouTube. So what were the contributions that were made? After messaging him, I was only able to get an average of $4,500. So I put together this spreadsheet that shows you the difference an average $4,500 contribution can actually make. To add to this, by watching his videos, you know that he puts in more money when he feels the market's undervalued. However, we're never told the amount and the actual date. So we don't know how to calculate this, and this distances us away from his actual return. Add to this the fact that he said his Acorns return was 17%. But if you don't have Acorns, how are you supposed to know what that 17% represents? Is it total return, time weighted, money weighted? There's so many different types of returns. In fact, I don't have Acorns, but I went on their website and tried to figure it out, and I still couldn't figure it out. So all things considered, we have to deduct another point down to 6. And if I come across as harsh, I apologize. It's not that I hate the guy. It's that I actually really admire him. And if you watch some of his previous videos about why he does what he does and his passion and his story, I mean, you can't help but just root for the dude. But I do it because I want us to hold these YouTubers and the... Subscribe. I'm sorry about that, but what I was trying to say is we both want the same things. We want our audience members to succeed, and we want ourselves to grow as a human as much as possible to provide as much value to our audience as we can. This means I have to be very harsh on these people because we want to get the right information so that way we can do the right things for ourselves. Which brings us to portfolio 2, which is M1 Finance. In this M1 Finance, he doesn't give us the beginning balances, he doesn't give us the beginning and ending start dates, nor does he give us any contributions or withdrawals, which is kind of mirroring the other things. Keep in mind, he does quote the M1 Finance return, which is a money-weighted return, which I like. However, it doesn't actually include dividends, which is really funny to me, and just like this nerd struggle I have. Like, why would you not include dividends in the return? You put in money, you got more money back. It's just, the things I go through, I guess. Only the things I care about. His third portfolio is SoFi, and he references this 22%, which again, we don't know what percent that is. But I'm going to ignore that because it brings up a very fascinating theory in how you measure your actual performance. Do we include all those free stocks that he gets? Personally, I like to ignore them unless he's actually using them for his investment strategy. But instead, I would only want to focus on the money that he put in and allocated himself to see how his investing strategy works and just kind of ignore those free stocks. But that's up to interpretation. That depends on the analyst and up to you.
And number 4, guys, is basically Robinhood, okay? And then here I have around $14,219. A ton of money if you ask me, okay? But the answer is, you might say, Tommy, why do you have all these apps, bro? The answer is, number 1, I do reviews for you guys and test them out. But also, when I bought them, basically, I had to send money over to Robinhood and they gave me the money instantly. That way I bought the investments instantly also. That's why I have it there. But I wish I could transfer it over to another investment app. But in reality, it would cost me around $50 per investment. And I do not want to do that. And by the way, although you might say, Tommy, this account right here is negative. It is negative. But if you click all, in reality, I'm up around 31.96%. I think my light just went off and on. Must be a ghost.
I love that he shared this miscellaneous detail that adds to the whole picture of the asset allocation. And it's very important that we do this, just like in the Ryan Scribner video, when he talked about one of the mergers with this company throwing off his return. However, and this is going to be really funny, he used total return that Robinhood provides as his performance. But in M1 Finance, we just use money-weighted returns, which are two different returns that you can't compare with each other. It doesn't work like that. And it just goes to show how knowing which return you're using is super important. Add to this the fact that we didn't get any of the spreadsheet information, which I won't go over because you know the drill by now. But again, we're not deducting any points because we've been doing this the entire video.
The last app I actually use is the Cash App. You probably never thought about the Cash App, but in reality, the Cash App is also an investment platform. And I transferred money instantly over there to capitalize when the market was down and buy very, very low. Now, as you guys can tell right here, I'm also down around 0.42%, but in reality, when I click all, I'm up around 37.04%. And by the way, I only have one investment, okay? And that is basically Vanguard S&P 500 ETF, okay?
So his last investment portfolio, not to beat a broken record, had the same issues with it. So we're not going to deduct any points and I'm not going to go over it. However, that brings us into the lightning round. So let's get into it. First, he goes from a 6 to a 5 because he had no tax considerations. Actually, I should make a note. He did talk about taxes in a different video, how Acorns actually readjusted his portfolio unbeknownst to him, and that incurred a tax loss. However, we also don't know how many dividends he received. So whether he had $100 in dividends or $1 in dividends makes a difference in the tax efficiency of the portfolio. And because we don't know that, we won't actually understand his true performance. Moving on, he's going to go from a 5 to a 4, and that's because there was no benchmark. Even if he gave us the right information, we don't know whether the S&P 500, for example, or QQQ, for example, could have outperformed his portfolios. That means he's at the same portfolio score as Ryan Scribner, a 4. And after reviewing all the information and going back and forth between Scribner and Bryson's portfolio updates, I feel pretty confident in giving them both a 4 and putting them on even keel. Now, I'm not one to end the video without offering my best piece of advice, just like last time. And to Tommy Bryson, that would be to, instead of focusing on asset allocation, to do one portfolio update right and then move on to the asset allocation. And to do that, I would decimate the use of about or average in your vocabulary. We want the exact amount of money and the exact dates so that way we can calculate the actual return. And then from there, we can work on some of the other things. And if you want to know how you can do that, you can check out some of my previous videos where I walked you through some of the important things you need in portfolio updates and other ways of calculating and communicating your performances. But that's all I have for you in this video. If you enjoyed the content, make sure you like that smash button by stalking that subscriber count and Liberty Bell that notification icon. Thanks for watching, and until next time.